Hello again, everyone. Andy, I'm back with another 2022 year-end Roth IRA video. This one specifically is what happens if here we are, early 2023, you are doing your 2022 taxes and you realize, oops, I contributed more than I was able to either a traditional IRA or a Roth IRA. Now what do I do? Well, you have a few options. Let's first talk about making an excess. These are called excess contributions, an excess Roth IRA contribution. So your ability to directly contribute to a Roth IRA for a given year is based on your MAGI or modified adjusted gross income for that year. You can find links in the notes to this video for what the relevant MAGI limits are for 2022. So let's say a common example is early in 2022, you make your full year's Roth IRA contribution of either $6,000 or $7,000, depending on your age, and come to find out that you ultimately earn much more than you're expecting. Good problem to have. Maybe you get a big bonus or something late in 2022 that you weren't anticipating. That then spikes your income over the MAGI limit for last year, such that you're not able to contribute much or maybe anything at all to a Roth IRA for 2022. Yet you already made the contribution. Now what do you do? So there's a few options, and this is very common. There's a few options. One that I don't recommend, you can leave it in. If you do leave it in, there's going to be a penalty. Specifically, every year you leave in that excess contribution, don't take it out, there's a 6% penalty applied on it, and you pay that penalty through Form 5329 in your tax return. Now, not ideal. You can let it sit there and let it ride and just keep paying this 6% penalty forever. Obviously, that's not wise, because that penalty, that drag is going to be an expense you're never going to shake until you eventually get the money out. So let's say here you are doing your tax return again, early 2023. You realize, oops, I contributed $6,000 to my Roth IRA. I wasn't eligible to contribute anything because my MAGI was too high. You can take it all out. You have until you file your tax return, inclusive of extensions. So, for example, this year you have until April 18th, 2023, to file your 2022 tax return. Or if you file for a 6-month automatic extension, that takes you to mid-October. You have until then to ultimately take out the amount of your excess contribution. Now, here's where things get a little tricky. When you take it out, you have to take out any earnings or losses attributable to it. So for example, you put in $6,000 in your Roth IRA in early 2022. Let's just say it grew to $7,000. You would now have to take out that full $7,000 if you want to take out all of that excess contribution and the earnings attributable to it. Now, the removal of that excess $6,000 is neither taxable nor penalized, but the taking out of the $1,000 of gains you got on that money is subject to ordinary income tax and is subject to 10% early withdrawal penalty. Now, 2022 was not a great year in the market, so chances are, if anything, your $6,000 would have went down in value, not up in value, from the time you contributed it to when you take it out. If there is a loss, so you put in $6,000 and it dropped to $5,000 due to stock or bond market losses last year, you would have to take out $5,000 now. You don't have to take out, you don't take out 6, you take out 5,000. Now, unfortunately, there's no tax savings or benefit to that $1,000 loss. You simply take out the $5,000, which is, again, was $6,000 initial contribution minus $1,000 of losses on that contribution, and that's it. There's no tax or penalty on it because you didn't have any gains on it. So that's the process to take out an excess contribution. Again, you can do that before filing your tax return, inclusive of extensions, if you get an automatic extension or file for an automatic extension to your tax return. So option 1, leave it in, pay the penalties forever. Option 2, take it out. Option 3, you can recharacterize it. So what does that mean? So you made a Roth IRA contribution, same scenario, $6,000 Roth IRA contribution early 2022. Come to find out, oops, made too much money. I wasn't eligible to make any Roth IRA contribution. You can recharacterize it and basically tell the custodian of that Roth IRA, hey, pretend as if this was a traditional IRA contribution I made and treat it as such. So they will retroactively go in and say, okay, that $6,000 you put into your Roth IRA in February 2022, we'll pretend as if it went into your traditional IRA. Any earnings or losses associated with it will also look as if it has been in your traditional IRA all the while. So that's one way. Another way you can get out from having to take the money out. If you want to keep it invested in some type of account, just recharacterize it to instead have been a traditional IRA contribution. Now, anyone with earned income can make contributions to a traditional IRA. There's no income limits on your ability to contribute to a traditional IRA. Where income limits come into play, specifically, there's another set of MAGIs, or modified adjusted gross incomes, which again you can find in a link to the video. Where MAGIs come into play for traditional IRA contributions is your ability to take a deduction on the amount of the contribution. So chances are, if your income is so high that you're phased out from being able to contribute to a Roth IRA, you're almost certainly going to be phased out from the ability to take a deduction on a traditional IRA contribution. So if you do this recharacterization from a Roth IRA to retroactively make it as if it was a traditional IRA contribution, that's cool. That avoids having to take the money out from the excess contribution, but you most likely won't get a deduction on that contribution to the traditional IRA, which now means you have quote unquote basis, or after-tax non-deductible money that went into your traditional IRA. That's going to cause, I don't want to say headaches, but there's going to be some tracking and monitoring you'll have to do going forward, because now your traditional IRA isn't all normal pre-tax money. Some of it's already taxed because there's not going to be a deduction on the amount that was recharacterized in from your Roth IRA. And how you do this tracking is through Form 8606. You'll have to file every year as part of your tax return. It's not that difficult of a form, but you'll have to file that every year. That's what tracks the basis or after-tax monies in your traditional IRA year to year. So that's it. So that's what happens if you that's the Roth IRA. What if you over contribute to a traditional IRA? Well, I already sort of got into this. So long as you have earned income, you can contribute to a traditional IRA. There's no income limits on being able to contribute. Where the limitation is whether or not you can take a deduction on the contributions. And again, that is based on modified adjusted gross income, of which there's a few different thresholds and levels. That depends on your filing status. It depends on whether or not you have access to a retirement plan at your employer, such as 401k. So it's a little clunky and hard to explain in video form. But again, check, there'll be a link in the notes to this video that further details that. So there's not really an excess contribution to a traditional IRA per se. So long as you don't contribute more than the amount of your earned income, there's no excess. So, you can put in $6,000 or $7,000 in 2022, depending on your age. So long as your earnings, your total earnings were more than $6,000 or $7,000, that's fine. You can make that contribution. The only question again is whether or not you can deduct that contribution, and that'll be based on your MAGI. Check out the link below. That'll help answer that. All right. Hopefully this made sense. Thanks as always for watching. See you next time.